Good afternoon, everyone. Thank you for hanging around to be with us today. Yeah, we have a very interesting report from United States. The non-farm payroll yesterday pulled a lot of surprises in the reports, unlike what we expected. Like the non-farm employment change fell very far from 1 to 150K instead of 178K. Even though it's not too bad, but yet we expected a better result. And the unemployment rate also rose a little, but still not too much. So what we noticed is that this had a very significant effect in many pairs of the US dollar, like the US Canadian dollar. It reversed the trend that was already up, and also I know why. And it's also good for people who have interest to long this pair, because we know generally the pair is in an uptrend and we continue to possibly we get to these highs. But this highs is coming from a very important level in the past. To check the weeklies, is the high of 2016 and 2020. So also we believe it is going to that place before it turns around. If not exactly, but close to it. So it's a very good one to watch. So that is why we believe that this is actually an opportunity for anyone interested to buy into this pair right now. So what we are looking at is how to actually buy it. Like, we should wait. I intend to wait. This is very tempting level to enter, but I don't think it will hold. I will prefer to allow it to come down to this zone. From here, then we start to take a very aggressive long position. Why it's important to wait till this level is because this is actually the key level from where it gathered trend for its formal movement. So once it retests that place, if it comes to retest it, it will also reverse and continue upside. And it's also important to note that the Fed is not done with interest hike. It is expected almost 30% right now, a 40% chance of them to hike once again in December. But the Canadian dollar have paused. I think on the October 25th, as I've told us before, around October 25th or 20th, they made decision to pause, and I believe even though they have a worry of some provincial spending to also affecting inflation, but I don't think they will go back to increase it, but they may hold it for a while. So fundamentally, this pair is still bullish. So we shall take a look at it some other time and possibly buy it from this level. That's what I'm waiting for. Now you see what the news have to say. Even the US equities rallied because of that weakness in dollar. So it's quite interesting. So we shall now examine another pair. Like this one, I have told us before now that it will come up to this level, but see what the news helped us to achieve is almost close to our target from where I expect it to come down from. So I expect us to be patient, waiting for it to happen. It's supposed to come up to this level, possibly even a little bit higher, just somewhere around here before we go down. We know quite well that most banks are about to pause, but only the Fed of United States still have a chance to hike. So this will rally up but still come down. And I've showed us our target formally, a very interesting target. We are coming down close to this place, to these lows. But you can take profit from here, but this is where we are targeting. Uh, but not this ones, not this level, because this level is a political by some political turmoil last year. So this is the possible lowest low we can get that is reasonable. So and euro, the euro is actually very bearish, and the chart is moving as we expected. For 2 weeks, I've been waiting for this to pull up. It still has some room to go up a little before coming down. So we just relax, no need to rush. We only short it when it starts going down, not while it's still going up. I would not like to make the mistake I made with euro, AUD, Australian dollar, Swiss franc. So you have to wait when it's done with this upside and start to move down, just like this place. When it is confirmed bearish, possibly with a day of bearish candle, then we can start looking for a sell opportunity. We have a lot of grounds to cover, so there's no need to rush. There's no need to rush. So, but most of this trade will be far into next year because December there's nothing much to trade. So possibly by December, January, all these grounds will be open for to be covered. So now we have another one. This one is looking as if we are in a very bad position, but since this trend line is not yet broken, I think we are in order. So let me remove this. It came down exactly to this trend line. And why it is so is because Australian dollar has gained strength because of this current weakness in US dollar. So it pulled this down further than expected. And also, that the euro is actually a very weak currency. But in comparison with the Australian dollar, we expect that it will maintain because euro is a bigger economy than the Australian. So we maintain this trend and continue. But if it breaks this line, then we are at risk of a reversal. But I don't think it will happen so fast. The line, so but we should be open for anything. So that is the analysis. We should be open for anything. But this support level should hold, and the trend line also should hold. That's my analysis, which is why I'm calling for a run up back to these highs or even higher. Back to these highs or higher. So we should be patient and believe, or possibly we wait a little to know what the market has to offer. It appears it's now at a precipice. Now at a precipice, so anything is possible. So possibly it may also come down to this place. Yeah, that's another possibility I'm seeing now. It may also come down to this place. Because everything is possible. It will come to this place. So, and then from there we move up. So that is a more likely, that's another possibility. So that is another possibility, and I don't think it's a bad idea to give it that space to relax and cool off. So that is it. So we shall have another look at it in this perspective. So